Hey everybody, welcome to Keyword Crypto. This is Michael, and I have returning guest Sharon Yip from Polygon Advisory Group. She's a crypto tax accountant. And I wanted to have her come back on. She was on a few months ago, and I wanted to have her come back and talk about quirks, pitfalls, consistent patterns that she noticed with her clients, like the same questions that she was having to constantly say over and over to them. So we can tell you all about it so you don't make those same mistakes next season when you file your taxes. So welcome, Sharon. Thanks for coming back.
Thank you, Michael. Yeah, I'm glad to be back. So, as you guys know, the tax season just finished a week ago, October 15. And it's been a very challenging year for us. This is actually our firm's first year. Today is actually our first anniversary. We formed our firm exactly on October 25th last year. Sorry. And we have served, I lost count, probably close to 1,000 clients,
Oh
crypto
man.
clients this year. Yeah, we grew our firm very fast. So we have seen cases from pretty straightforward, but those are actually minorities. Most of our clients, they are in DeFi and many different complicated transactions. So we have seen very complicated cases, and those are very challenging. But regarding tips, I do have a few that I would like to share with everybody. The first is we have a lot of people coming to us telling us that they started involving crypto several years ago, and they never pay attention, never reported their taxes because this is the very typical wording. I never cashed out, so I don't need to report them. Um, but this year, I got involved in DeFi, so it's very, and I've been doing staking, and so I guess I will need to report my taxes. That's
Oh
why I need
man.
help.
Oof.
So it's a very big misunderstanding. I'll still now, even though the IRS has issued this FAQ guidance 2 years ago now, back in 2019, around this time, they make it very clear every time when you sell or exchange crypto, either with fiat or another cryptocurrency, is a taxable event. You need to report your gain and loss, which is calculated based on your sales proceed or deemed sales proceed compared with your basis in the crypto. But still, many people still believe. I think that's just they wanted to believe.
Yeah.
They don't need to report anything until they cash out and get the money into their bank.
Yeah. So I
Uh,
had a question
mhm.
from a listener who asked that exact question. So let's do a layman's recap of what you just said. If I have money on KuCoin, let's say,
Mhm.
and I buy Bitcoin and then I decide to trade it for Nano, because everybody knows I'm a big Nano shill on this show.
Mhm.
So I trade it for Nano. As soon as I do that, that's a taxable event. I have to pay taxes the next cycle, like the next tax season, on like whatever percentage of that Bitcoin, like how much the Bitcoin went up. So let's say I bought Bitcoin at $10,000 and at $60,000 I trade it for Nano. I have to pay taxes on
Mhm.
that $50,000 profit.
That is correct, and it's actually quite easy to understand how it works. Let's say, in your example, you bought Bitcoin at 10K, okay, $10,000, like a few years ago when the price was still low. Now this year, the price is 60K, and then you decided to sell this one Bitcoin for Nano, and the difference between this now the new fair market price that you are using to buy Nano and your original basis, the $10,000 is 50. That would be your capital gain. If you held the Bitcoin for more than a year, it would be a long-term capital gain. Now, people may think, well, but I never cash out. I just convert into another crypto. I don't have any money in my bank. However, if think about this, now you are holding on $60,000 worth of Nano. That's your new asset.
Yeah.
So if you immediately sell it and cash out, you would be getting this 60K. It's just your choice, your decision
Yeah.
not to convert that into cash. Instead, you decided to use the money to buy another crypto.
So what the user should be focusing on is every time we make a transaction in the IRS's mind, we've sold that Bitcoin, we've taken the money, we've put it into our bank account, and then we've taken the money and put it directly back into KuCoin into a new investment.
Exactly. You hit the nail on the head. That's exactly what's going on.
And we talked about this in the last one, in the last interview, but just to clarify, there is actually an option where you don't have to pay taxes if you form a separate entity. But that's a really big undertaking. It costs a few $1,000s. It's kind of like creating a crypto version of a Roth IRA. But that's something you have to actually do and pay for and create it. And then you can still only put in, what is it, like $6,000 a year into it, just like a regular Roth IRA?
Right. So you're talking about actually using a self-directed IRA account to invest in crypto. So if the crypto asset is inside a retirement account, then no matter how much you trade, exchange, any gain and loss is not taxable as long as the asset is still inside that retirement account.
Okay. So, but that is something that is not done for you. It's not normal. It's something that you have to actively go out there, find a company, create this entity for you, and then you have to everything completely separate. It's like treating it exactly like a Roth IRA or an IRA. You cannot have it interact with the rest of your crypto money.
That is very correct. It is very, very important to keep in mind. If you do set up a self-directed IRA account and then use it to invest in crypto, it's very critical that you separate those assets with your personal crypto asset. Do not ever commingle and mix things up because that can get your retirement account disqualified.
And also you have to remember is that just like a regular retirement account, you can't pull the money out until you retire. So you have to be very careful when you're doing crypto stuff. Make sure it's money that you're setting aside that you're not going to use until you're 65 or whatever the retirement
Right,
age for it
unless you
is.
meet some exceptions. So
Okay.
there are a few exceptions in some cases that, I'm sorry, you are allowed to take an early withdrawal, but it's very limited. And the requirements are very strict, so you need to be careful. Otherwise, if you take an early withdrawal, you are not only required to pay income tax on the withdrawal, you also will be subject to an early withdrawal penalty, which is 10% of the amount that you withdraw.
On top of the normal taxes that you have
Correct.
to pay. Okay, so you're
Yes.
paying your taxes and then you're paying a 10% penalty on top of that.
Exactly. Especially for Roth IRA, you need to be very careful. One big advantage of Roth IRA compared to other regular retirement plan and other IRA or 401k is it's not a tax deductible item when you make the contribution. However, when you take the distribution, if you follow the rules and just take it when you qualify for it, it's totally completely tax free. So Roth IRA, you can use it to invest in crypto. Let's say if indeed one day Bitcoin price goes up to $1 million. Okay, so you have this $1 million sitting in your Roth IRA account, and then when you reach your retirement age, you are able to take the money out. It's completely tax free. Unlike the other traditional IRA account, it's just tax deferred, meaning when you take the money out, you actually have to pay tax on the withdrawal as income. But however, if you do an early withdrawal of your Roth IRA distribution, if you don't meet any exception and qualify for any allowed distribution, then it will turn into a taxable event, meaning that the withdrawal will be subject to income tax.
So you would have paid the taxes on the front end and on the back end.
Correct, because the contribution to a Roth IRA is not tax deductible. So you will be using after tax money to invest as if you are just investing in a regular investment account, personal investment account, and then you have to pay tax when you take the disqualified distribution.
Nice. So just to recap for everybody, The normal standard is that every time you make a trade, you have to pay taxes on that if you are in profit.
Mm-hmm.
Everything has to be registered. Everything is registered and everything's on the blockchain. So if you don't, they're going to catch you eventually. So make sure, do your taxes every year, report every single trade, use software, use whatever you need to do. They're all like, there's a bunch of different softwares out there that you can pay for, and they will collect all your transactions and break it all down for you. But it's probably better to go, if you have a lot of transactions, to go to an accountant to make sure that you're doing it, taking the correct approach to it. And to recap, also, there are options to create Roth IRA type accounts where you don't have to worry about paying. You're not being taxed every single time you make a trade, but you're not automatically in those. You have to actually go out, find a company, create those for you. That costs money. And then it's kind of the same things as like, you can only put in so much every year. So if that's something you want to do, maybe go check the first episode for the first interview, and then we go through a lot of that in that one. So that's point one.
Right. I do want to add a little bit about reporting your crypto transactions. It's not, that's also another misunderstanding. Many people thought they only need to report their crypto transactions if they have a gain. They thought if they have a loss, then they don't need to report. However, here's the thing. If you don't report, how do you prove you have a loss? Second,
yes,
if you don't report your loss, actually you're losing your tax benefit, because your loss can be used to offset your gains. So why do you not want to report your loss, right? While you
exactly.
can use it. And again, if you skip all the loss, then you will not be able to correctly show all your bases or your transactions. So if you get an audit from the IRS, you will at that time have to provide all the information and redo everything. So we always advise our clients to make sure to include all their transactions. It doesn't matter whether it's a gain or a loss. Everything has to be there.
And remember, if you take a loss, if you had a really bad year and you don't report it, you're literally just giving money back to the government that's rightfully yours.
Exactly. That's exactly correct. Yeah, that's why when people came to us, they are like, oh, well, I had a bad year in 2000, let's say 2018. So I didn't report any of my transactions because I had a loss. Anyway, I would have to worry about paying taxes. I don't have a gain. So in that case, we will be like, well, but you have a loss. Why don't you want to deduct that? They're like, oh,
Yeah, you paid $40,000 in taxes on your normal job. You could have paid $20,000 instead.
Well, here's another thing though. If you end up with a net loss every year, you are only allowed to deduct up to $3,000. So
Okay, good to
$3,000 is
know.
your net loss. However, you can carry forward your remaining loss almost indefinitely until
Oh
the day you
man,
die.
that's amazing.
So yeah, so for example, some people they have a pretty significant loss in 2018. Let's say it's $100,000 of loss. So let's say they don't have any gain that year, they don't have any other capital items from their stock or mutual fund. So crypto is the only thing. Then they will be able to take a $3,000 loss deduction for 2018. Now the remaining $97,000 they can carry forward to next year. So let's say 2019 they had a very good year. They actually have let's say 50K of gain, but because they have a $97,000 of loss carry forward from the previous year, guess what? They can use it to offset 100% of their 50,000 gain for 2019. So they would
Wow.
end up with not have to pay any tax on their capital gain.
Okay, so you're only allowed to use 3,000 of loss, but if you have a big year, you can use the remaining to wipe out all of the gain.
Right. So the $3,000 is a net loss.
Yeah.
So let me give you another example. Let's say this person, same scenario. So he had $100,000 of loss for 2018. So he took a $3,000 net loss deduction because that's the maximum he can take. He still has $97,000 of loss carry forward to 2019. 2019. So let's say in 2019, he actually had a $95,000 gain.
How
So
about this?
now he has 97.
Let's say he has $105,000 gain.
Well, yeah, if that's the case, then he can use the whole 97,000 loss to offset, not 100% because his
So
gain is
he would have
more.
$8,000 left of gain,
Right.
essentially.
But
That's amazing.
right, but the scenario I was going to say is, what if he had $95,000 of gain for 2019, which is actually $2,000 less
Yeah.
than his loss carry forward. So guess what? So after he used up $95,000 of loss to offset 100% of his gain for 2019, he still has $2,000 of loss left, right? And
Yeah.
guess what? He can go ahead and deduct that as well because he's eligible to deduct up to $3,000 of net
Wow.
loss
Okay.
every year.
So he could technically have declared a loss for a year that he made $95,000 in gain.
Mm-hmm.
That's amazing. Okay. Yeah,
Mm-hmm.
I see where you're going with that one.
Right.
Yeah, so everybody, see how important this is? If you had a really bad year, and the good thing is how far can you go back and amend your taxes, Sharon?
Right. So that's the thing. There's something called statute of limitation. It's 3 years. 3 years starting from uh, after you filed the return, or if you filed it on time, it would be the deadline, like April 15. Let's say if you filed it by April 15, that would be the time that the clock will start ticking. Or if you file late, actually, it would be 3 years after you actually filed your tax return. Now, this year, a lot of people came to us. They started in 2017 in crypto, just like me, but they never reported their crypto transaction. So that they wanted to file an amended return. So we told them it depends on your situation. If you end up with a loss for 2017, which is kind of a little bit rare because that was a really good year near the end of the year.
Yeah.
But let's say that's the case. They actually ended up with a loss, then you can still amend their 2017 return even though the statute of limitation has expired. But the rule is, if you want to file amended return for a year that the statute of limitation has expired, you are not allowed to claim a refund. So in
Okay.
this case, even though if they are able to deduct a net loss for $3,000, they will not be able to get the refund. However, let's say this person actually has 50K of loss. So he decided to file an amended 2017 tax return and report this 50K of loss, then the return will show a $3,000 loss deduction because there's no it's not like an option you can pick and choose. If you
Yeah.
file a return with a loss, automatically you have to deduct $3,000 of loss up to that. Now, then he will not be able to get any tax refund for that. However, then he can still carry forward the remaining
Nice.
47K of loss to the
Nice.
following years.
That's great. That's great. So this is very, very important, everybody listening. Especially because we had such a horrible bear season in 2018 and 2019. Make sure you're filing those years because if you had a loss, that can all be carried over against your future gains. It's just really important. It's your money. It's your money. It's not the government's money. I mean, all government money is our money technically, but this is money that is owed to you, and they're not trying to stop you from getting it. They're just waiting for you to collect it. So make sure you collect it.
Yeah, so that's to your own benefit. Another side of the story is also your risk audit risk, because again, if you don't report it, there's no way for you to prove you have a loss because you never show the government the calculation. So what happened is that we do have people coming to us because they received an IRS tax notice. Because they never reported those transactions, because they believe they don't need to because they have a loss. But guess what? Some exchanges they have been using, for example, like Coinbase, Gemini, Kraken, those US-based exchanges, they filed a 1099K, or now they are switching to 1099 miscellaneous, I believe, to the IRS. So the IRS has a copy of their crypto record. Unfortunately, those forms only show the total sales proceed with no basis information.
The total
So the
volume,
IRS, huh?
the total
Yes.
volume, which is
No, the total sales proceed, cumulative sales proceed.
okay, because the one I got from
Mhm.
Binance US was a total volume, and it said like something like $700,000, and I was like, I
Yeah,
only have like $10,000 to my name, but
because
apparently
you
I was
keep
doing
it's
so
the
many
same,
trades.
right? It's the same amount keep rotating. It's like in a laundry machine, right? Keep
Yeah.
washing, it keeps spinning. It's the same thing, but it keeps growing because every time when you have a transaction, guess what? It adds up.
So
So
that's
the
what I meant
same
by like
10,000.
volume. So if I do
Mhm.
$10,000 trades 100 times, it says,
Right.
"Oh, you just did $100,000 in volume, like trading," and that's all they
Exactly.
know, and that's all the
Right.
IRS knows. And I'm just like, "Oh my god."
Yeah, exactly. So I do remember one of the clients who came to us after he received the IRS notice. He's like panicking because the tax notice was showing that he has over $1 million of gain,
Oh
and that is
my
all his
god.
gross sales proceed from the Coinbase 1099K. And he said, "I actually have a loss. That's why I did not report my crypto transactions." I said, "Well, you need to prove to the IRS you do have a loss, right?"
Yeah.
So the IRS will not care or will not try to find out what your basis is. They will just use whatever report they get and assess a tax liability plus interest and penalty,
Yeah.
and send a tax notice to you. And then they give you 30 days. And so at that time, it's really a bad situation. So one of the tips I wanted to share with everybody is be proactive. Do not wait until the last minute or wait until you receive an IRS notice, because every time when you receive a notice from the IRS, you already get on their radar. So
Yeah.
your chance of getting a full blown audit is much higher than people who have been in compliance and always file their tax returns on time and correctly.
Yeah.
So
And so everyone's aware, when I got that 1099K from Binance US that said it was like $600,000, and I was freaking out. When I finally went and did my taxes that year, I owed like $37.
mhm.
So that number has no bearing on what you owe. So don't freak out when you get that, but you have to actually do your taxes, because if you don't, all the IRS is going to see is that gigantic number
Yep.
and think you're making all that money.
Exactly. You are absolutely correct. Yeah, that's what's going on. So that's why don't wait until then, because then if you are not prepared, especially for people who have been investing in crypto for several years, let's say you get a notice recently. The IRS sent out like a couple months ago tax notices related to 2019. So let's say if you started in 2017 or even earlier, but you never reported your transactions, never did anything to try to reconcile anything. Now you have to figure out your 2019, the correct gain or loss. It's going to be difficult because you have to actually go back and start from the first year
Yeah.
that you are in crypto, because everything is just like a domino effect and it's all related one to another. So when you calculate your cost basis, you have to include the whole thing, all the transactions from you first started. So that is going to take time. And when you are under pressure, it's easy for you to make mistakes, or you are just like try to grab someone, whoever is willing to take your case. It does not mean that they really understand what's going on. So that's another thing I'm going to talk about a little bit later. But I guess my point here is that to be proactive, to really start doing the right thing from the beginning.
Yeah. And just remember, it takes time. If the more you wait, the longer it takes, and time is money, and it's not your time, it's somebody else's time, and they're charging you for their time. So you're
Hmm.
paying a lot of money to have somebody else fix your mistake by not doing it. So just
Right.
the more you do, the more proactive you are, the less money you're paying somebody else. I'm
And
not
that
trying
also
I'm not
go.
trying to take business from you, Sharon. Sorry.
No, no, no. That's actually what I wanted to tell people. Is absolutely correct, and that goes to another point: is to keep a good records. So the longer you wait, the bigger the risk is that you don't remember. We have a lot of clients that when we try to do the reconciliation for them. a lot of missing information, and when we try to ask them to provide those information, they're like, I don't remember, it's been several years, I did
Yeah.
not keep any record, and I have no idea, and I I already closed the account, I don't use it anymore. Then we are like, then how do we help you calculate the correct basis for all the coins you sent out from that account to other accounts, which we have to handle because you are still using those accounts and having all the transactions there.
Yeah. So quick question before we get into the second point. Sorry, because
No problem.
this is how this always goes. We start
Yeah,
talking
I
and
know.
what if I used the international version of Binance for a while before it was closed off to Americans? I
Mhm.
did the taxes, and so I had the paperwork filed through a different company, through like a small like tax.bitcoin or whatever. And then they close it, and then I try to go back and reevaluate everything with you, and I can't get into Binance.com anymore because they won't allow me because I'm an American. How do I,
Mhm.
like, are all those numbers safe from the old tax? Like, are you able to figure out those numbers from the old tax returns?
Well, if you still have a report, let's say if you did use a crypto software at that time and you imported the Binance transactions into that software, and if you are able to download a report to show all the transaction details, then we will be able to use that to try to get uh, those information into the current tax software that we are using for you.
Okay.
However, if the only thing left, let's say that software is no longer in existence and you didn't keep any record, and you cannot get into the exchange, and but you did report those transactions on your tax return for that year, it is almost useless for
Okay.
us because we cannot just use your tax return, the capital gain and loss report, to try to figure out all the pieces.
Gotcha. Okay.
It is a different thing. However, I do want to touch on quickly about Binance.com, which I have an account with them. I started using them when I first started in crypto back in 2017. And we also have quite a lot of clients. They have used Binance.com several years ago, and
Yeah.
now they cannot get all the transaction. First of all, you cannot hook up an API anymore. They just do not allow you to do that. And second, when you go in, also, even if you can go in, Binance, they only allowed you to download 3 months of transaction history each time, and then you have to wait 24 hours, things like that. So it's going to
Oh
take you
God.
a lot of time to go through if you have several years of data.
Yeah.
However, we found that if you contact Binance support team and tell them the situation, tell them you're in the US, you used to have an account, and you really need the information to do your tax return, uh, there's a pretty significant success rate for our clients to be able to get that. Yeah, most likely you will have to wait a while,
Okay.
depending on how busy they are and how, what their mood is like, whether they want to give you the report or not. But most people that we know, they contacted Binance support, they are able to get the report from them. So this is worth a try. And also, not long ago, many people received a message from an email from Binance saying that, hey, your account is now open for, I think it's like 7 days or something like that. I forgot the exact number of days. But they give them a window that they can actually log in to their Binance account and then get whatever they need from the account within that time frame. So
So
that.
this is something you should probably do earlier than later, because if you wait till March of next year, probably everybody and their mother is going to be contacting Binance
Mhm.
to get those things all at once, and it could take you months to get a return email
Yep.
from them. So
Yeah.
start doing that now, and
Mhm.
get that taken care of now. Because also it's in Binance's best interest to give you the information, because they're under the microscope of a bunch of different governments, and they're trying to be as above board as possible. So they're going to want to try to help you out with that, so they don't, you know, so a bunch of people aren't calling their government saying, "Hey, I'm trying to get this for you, but Binance won't give it to me." You know,
Mhm.
the government's going to start getting pissed off at Binance for not helping out. So it's in their best interest. So just, be cool, go early, don't wait to the last minute,
Yep.
and it should be
Totally.
okay.
Yeah, that's actually a point on my list that I wanted to share as well. It's really don't wait until the last minute. And then another thing you don't want to wait until the last minute is if you are being proactive and you act early, that will give you time after you get your transaction calculated, reconciled, to do planning. So if you do it, let's say now, you get everything all figured out, then before the end of the year, then you can evaluate and decide whether you want to do some planning, like sell some coins or move things around, or how much gain you already have. And maybe you can use still now at this point, loss harvesting is still allowed. There is, a bill in the Congress that will make, if it gets to become law, it will disallow. I mean, I should say it will subject crypto trades to the wash sell rule. Currently, that rule only applies to stock trades, security trades. So crypto investors have been using that loophole for quite a while, several years now. The Congress is trying to get rid of it. However, before it becomes law, still you are able to use it. So that is a strategy you want to consider if you have any unrealized loss. If you realize some gains, you may want to use this. So how it works is that you sell your crypto holding for a loss, and then you immediately buy it back. Then you realize the loss already, and then you are getting it back at the same low price, so you are not losing anything.
And you have to do this by the end of December 31st, or by the end of the
Correct.
fiscal year? Okay, December 31st.
Yeah,
So,
because we are using calendar year for tax filing, so it has to be December 31st.
okay, so just to clarify for people, this is what she's talking about. Let's say you made $100,000 in profit this year, and you've done all the paperwork, you've done all the tax filings, you've done everything. You know how much you've made. It's December 25th, but you have one crypto that you have a massive loss on. You can sell that, rebuy it, and that massive loss will be taken out of your gain.
You will be able to use that loss to offset your gain from other crypto.
But you can just buy it right back at the same
Correct.
exact price, and
Yep.
but it's triggered that, and that's what she's saying Congress is trying to stop us from doing in the future. So,
however, one thing I do want to mention, though, the downside of doing this is you will, even though you can get it back at the same price, you will lose your holding period, because it's considered. So let's say you bought this crypto 9 months ago, and you plan to hold it long term. You truly believe that this is going to go out very to a big amount. So you want this to be a long term investment. But now you want to utilize this loss harvesting, and then you decide to sell it for a loss and then buy it back right away. So when you do that, you have to restart your holding period. So you lose that. So if like a few months down the road, for some reason you need to sell it again, it's going to be a short term. If at that time there's a gain, then it will be a short term gain. Instead, rather than if you have been holding onto it, never sold it, and then now you will end up with a long term gain, which is subject to a lower tax rate.
And 12 months is the cutoff, right? So,
Correct.
So anything before 12 months is a short-term gain, and you have
Yep.
higher, and you owe more taxes on those taxable events. Anything after 12 months is a long-term, and you get to pay lower taxes.
So it has to be more concrete. It has to be more than 365 days.
Okay, perfect. All right, sweet. So what's the next point?
Right. So I would, because we did mention about crypto tax software, right? So I do want to mention is this: many people still thought that if they are using a crypto tax software, they are all set. They don't have any, they can just use the software to generate a tax report and then put it on your tax return, and it's done, and everything will be fine, will be perfect.
Yeah, that's what I've done for the last 3 years. I thought everything was great until I talked to you.
So here is the bad news. If that's the case, you don't need any CPA. You don't need us. Okay. I'm not saying that that's definitely not the case. However, I do want to caution everybody. Do not blindly trust anything. Not crypto tax software, and not even tax professionals. Okay, so there are two things here. One is let me talk about the crypto software first, and then I'm going to talk about the tax professionals. Okay, so the crypto tax software, they are designed to help you calculate your crypto taxes. However, each software, they have their own limitations. Okay, there's no perfect software in the market, I can tell you, because we have tested pretty much every single software in the market. Um, because personally, we are a crypto investor, we need to use it, and also because we specialize in providing crypto tax services, so we have to use it for our clients. There's no perfect solution. So every software, they have their pros and cons. This is one thing. The other thing is everybody's situation is a little bit different. So, for example, let's say we have two crypto investors. They both started around the same time. They have about the same number of transactions, same type of activities. However, they use different exchange accounts. Some are using more like overseas. Those they don't keep very good record. Some are using just US based, purely US based, that they have very good record. They can use API, easily hook up everything. I can guarantee you those two individuals, if they use the exact same crypto tax software, they most likely will not get the exact same result regarding the accuracy, the correct, whether the tax report is correct or not, because software is relying on the data source. What you fit into the software, that is what the software is going to get for you.
Yeah.
If the data source is incorrect, because there are some exchanges, they only provide partial data. They only provide, let's say, only trades. There's no deposit and withdrawals. You will have to go in and get those. Or they don't provide you any of the staking income, interest, or bonus. Some, they only provide you the last 3 months or even last 7 days of data when you generate a transaction report from your
Oh
accountant.
God.
Yeah, so we have seen all different kinds of situations. So if you blindly just trust the tax software and you just download your transaction report from the exchange accounts you have and import it into the software, and then you say, okay, I'm done. I have done my job. This is what they told me. Within 10 minutes, I will be able to get my tax report done and it will be perfect. That is not going to happen.
Yeah. That's
So I guess the lesson here is that you need to understand really whether this tax report is correct or not. It depends on whether you are able to really get all your transactions correctly into the software, and whether the software has any features to detect any variance or missing transactions or errors. Some people use some software. They came to us. They say, well, I've been using the software. I don't see any error message. So I believe that this is 100% accurate, right? So now when they come to us, we switch them to another software that we are using. And then, of course, we have to go back and redo the whole thing because we cannot just use partial data. And then we turn out to have a very different result than what they produced with the other software. So I was like, wait a second, you have a lot of missing transactions in prior year. So that's what was causing this no basis error. And why didn't you see that in the other software? And then it turns out the other software has no feature to detect any error.
gotcha. And which software are you using right now?
Well, we are using contracting.info.
Okay. And just so people are aware, this is the one that she recommends that is the most accurate so far. And when I went on there, there's like 70 errors. And she warned me. She's like, this is going to happen. You're going to go in there. You actually have to know what you have so you can check, because for whatever, like she said, there's no perfect tax software out right now. It's all just a bunch of people trying to do this. So this is the most accurate one, and I'm noticing errors. So, and she warned me. She goes, so when you sign up with us, we're going to have to go in and we're going to figure out, and we'll teach you how to get rid of those errors. But like, this is all the other tax software that I've been using. I wasn't aware of those errors, and I'm sure there were a bunch. So now this year, I'm going to have to go through with Sharon, and we're going to have to figure out all those past errors.
Right.
So it's going to be it's going to be an interesting tax season for me this year.
Right. But the thing is, good news is though that once you get through that the reconciliation process and get all your prior year transactions all reconciled, that then it's like I always use this As example, it's like building a house. Okay, it's a lot of hard work and time consuming process to build a house because you need to lay the foundation, you need to build a framework, everything. However, after the house is built, you live in it and you still have to maintain it.
Yeah.
However, at that time you can enjoy living in this beautiful house, and the maintenance work compared to the hard work you have to pay people to put in is like nothing.
Yeah. Yeah.
So going forward the maintenance will become a lot
But also, just like a
easier.
house, if you don't do maintenance for 10 years on it, and then
True, that is very true too. Yeah.
all of a sudden you decide to do maintenance on it, it's going to cost you a hell of a lot of money.
Exactly. So ongoing maintenance is very important as well. However, if you have been doing maintenance, the good maintenance, then you can stay there in good shape for a long time. And another big benefit of going through the reconciliation process, knowing that you now have a very accurate tax report, everything is reconciled, is that you can get the peace of mind. Many people came to us saying that I cannot sleep well at night because I have never reported my crypto transaction. I don't know when the IRS is going to catch me.
Yeah.
So
Yeah.
that's
Scary.
another thing.
So when Sharon's saying reconciliation, just to clarify, you're saying go back and amend all your prior tax returns for the last 3 or 4 years.
Well, not really, not exactly. So our reconciliation works like this. What it means is, uh, you need to use a crypto software to import all your transactions for all the accounts that you have ever used, and you will need to be able to see that after all the transactions are imported, you see the correct ending coin balances for each account. So the reason we pick contracting as our tool is because so far as I am aware, that is the only software in the market that has this feature to show you something called balance by exchange, because then you can look at each account listed on that page and compare all your coin balances with your actual balance in that account, and then you can see whether they match each other or they are they're wrong. It's very common to see after people import, they see bunch of negative balances which are all red. They're like, wait a second, what is going on? I said, well, that's a proof that you don't have all the transactions correctly imported into the software yet. That's why you are showing a lot of negative coin balances. That's definitely wrong.
Okay. So it should either be 0 or positive numbers if
Correct.
it's done correctly. Okay. So this
Yes.
is good for people to be aware of.
Mm-hmm.
Okay, perfect. Yeah. So do it early, do it right, get it taken
Right.
care of. Don't wait to the last minute.
Right. And then one last point I do want to share is that when you work with a tax professional, first of all, how do you decide when you should work with a tax professional is when you have no idea what you're doing, when you have no idea whether the crypto tax report that you are generating from the software you're using is correct or wrong, then it's a good idea to at least get someone to check it out for you to say, hey, can you take a look and see if they really know what they're doing. They should be able to see pretty quickly whether there are places that shows some really weird situation or indication that they're probably you are having some errors. So the point is really get to how do you choose tax professional then. uh, at this point still in the US, there's very small percentage of tax professionals who truly understand crypto. For me, I would say if you go to a tax professional, if they say, okay, yeah, I know how to do this, there are a few indications whether they truly help. First of all, I still believe that it's important that person, they have the personal experience of crypto. If they have never touched crypto before, all they learn is just from reading, from any course they took, or from the internet research they did, is not going to be sufficient because crypto is such a complicated area, especially with DeFi, with all those new protocols,
Yeah.
NFTs, liquidity, all the stuff. It's not something you can easily learn if you don't have any personal experience. Now, let's say there are some professionals, they are able to understand and learn the technical side of it, then you want to see how they do the reconciliation for you. We have people coming to us saying that they have been using another tax professional, and to file their tax return for the past few years, they did report the transaction. So when I asked how did they do it, oh yeah, I just sent them my Coinbase report and they put it on my return. I said, well, is Coinbase the only exchange you have been using? No, I've been using a bunch of the other, but Coinbase is the only one that I am able to download a report. So I'm like
Wow.
laughing. Yeah. So I'm like, okay,
Nice.
I'm so sorry, but your tax preparer does not understand crypto.
Yeah.
And what you have been reporting on your tax return is wrong. It's
Yeah.
incorrect. So
And you
yeah,
may
just
and you
mhm.
may have the government may owe you a bunch of money, or you may owe the government.
Right. So you were saying that it could be the government owed you a lot of money, right? If you are only reporting partial data, then yes, you will not be able to tell until you have everything included. You could end up having a loss that you didn't report. You lose out on that, or you could have a gain that you didn't report, and then later you get caught, and then now you have to pay penalty and interest.
So a question somebody asked also was, how can the IRS verify every trade?
So this is a very common question. So here's the thing. The IRS is not responsible to prove your every trade. It's the other way around. You are responsible. So if you think that the IRS cannot catch you because they don't have all the data, that is correct. They do not have all the data. However, if you do not prove on your side or your data, the IRS will just assess you based on whatever information they have. So we talked about this earlier in this interview. Let's say if they receive a 1099K showing $1 million of total sales proceed from Coinbase, they are going to say, this is your gain.
And you have to pay taxes
Yep.
on that. Okay.
Yep.
Wow. Yeah. So I guess the takeaway from that is you're safe until you're not safe. You're safe
Hmm.
until you trigger a red flag, and then the IRS comes in and starts asking for all the documentation. If you don't have any of the documentation, you're fucked. You're
Exactly.
gonna
Right.
owe tons and tons of money because you didn't take good records.
Right. And the IRS is going to continue to go after, as you guys know, recently, like the infrastructure bill or the Congress bill, they all are starting to target crypto because they realize that there's just so much money in crypto. And still, a large percentage of crypto investors did not report their crypto taxes. So
Yeah.
they need money, right? The government needs money. Where do they go to? Of course, crypto is a really good target. So we believe that the IRS will tighten up and they will go after crypto investors. It's just a matter of time when you are going to get caught.
And here's the thing. So, whenever we're watching TV, we hear this like, billionaires need to pay their taxes. Well, you can say, "Oh, I'm not a billionaire, and I only made like $20,000 in crypto." Well, they don't know that because, like we've
Hmm.
been saying, on that 1099K, if you have $1 million worth of transaction history, even if you
Hmm.
only made $20,000 total profit,
Hmm.
in their mind, you're a millionaire not paying their taxes.
Yep.
So they think that all they can see is, oh my God, here's this rich person being a tax dodger, taking money
Hmm.
away from the system. When in actuality, you're just Joe Schmo blue collar worker who decided to dabble a little bit and buy some Doge. They can't tell the difference
Yes,
unless
you are
you do the work and show them.
absolutely correct. Yes, yes. I can't say it even any better. You are absolutely right.
Great. So, how many points have we covered so far of your 5 point list?
Well, we have been covering quite a lot. So I wrote down five different points, but I think we covered them all. So I'm going to just go over very quickly. So one is really to make sure you keep a good records. That's very important. And second, be proactive. Don't wait until the last minute to do your taxes, and give time so that you can do some planning. And then also you need to really understand the proper crypto tax treatment. Don't just rely on what you heard on the internet and all
Yes.
the misinformation people tell you that you just believe what you want to believe. don't blindly trust crypto tax software, thinking that if you input some transactions into the software, magically the software will get everything done correctly for you. You will have a perfect tax report for doing your tax return, because ultimately it is your responsibility. Nobody else will take that for you. And then also when you pick tax professionals to help you with crypto taxes, you need to make sure indeed they know what they're doing. Indeed, they are qualified to do the calculation for you.
Sweet. And so to go back, happy anniversary.
Yeah, yeah. It's our firm today, first year, so we are very happy
Nice.
that we survived this first year.
And for people who didn't listen to the first interview, can you give a brief rundown of your history? Because even though your firm has only been around for 1 year, you have not.
Right.
Just
That's
to be
true.
clear.
Yeah, sure, sure. So I have been a CPA, a tax practitioner for 20 years of actually over that, I lost count. But back in 2017, I personally got into crypto just by, I don't even remember how it started. Someone, told me about it out of curiosity. I just decided to purchase a little bit. And then somehow I got hooked. I really love what I see, like blockchain technology and all the things. And then also that's the time, not long after I started the huge bull run near the end of 2017 and
Yep.
got everybody so excited. And then I got in. And then in 2018, early 2018, when the tax season comes, I was like, oopsie, I need to report my crypto transactions. Okay, I need to figure out how to do this. And then I realized that there's no guidance. There's almost nobody around who knows how to do this thing. So that's the time I decided to uh, specialize this, and I left my corporate job and then I started my own solo tax practice. And since then I have been focusing 100% in crypto taxes, nothing else. And so that's a really amazing, interesting journey, of course, ups and downs. So 1 year ago, I decided to partner with another CPA. So we co-founded a Polygon advisory group. So I know him for several years. We work together actually in our corporate job, but he's been focusing more on the traditional side. So I send my clients to him for doing tax return because I don't want to handle tax returns. And then so now we are in the same firm, and we have a group dedicated specifically for doing crypto work. And every single person in our crypto team, we are personally a crypto investor. And even all our partners, including my co-founder partner, I got him into crypto. He became a crypto investor last year as well. So we are really big on crypto. And at this point, I would say more than 90% of our clients are in crypto.
So you're essentially an all-in-one. So you can do my crypto taxes and as well as all my other taxes, essentially.
That is correct. We are a full service firm. So we are a CPA firm. My partner is in charge of the traditional side of our business. So we do tax return preparation, tax planning, advisory, both for individuals and business. And we do bookkeeping, even payroll, consulting, everything. And then for the crypto side, we do reconciliation, we do crypto tax calculation. We also, again, we serve both individuals and also business clients.
Nice. So here's a weird question is I'm an artist and I use a CPA specifically for artists because like you
Mm-hmm.
said, if they don't understand the business, they're not going to know exactly what to do. And this is a business designed for artists, and a bunch of artists are actually, part-time accountants, and they're the ones running it, and they're overrun by a guy who's been in the business for 30 years.
Mm-hmm.
So I have to do specific stuff when I book work every year, like if I booked work that year and have
Mm-hmm.
them do my taxes. How would that work out? Could I come to you and have you do the crypto side of it and then go to them and have them do the artist side of it and then
Yes.
have just one of you actually upload it?
Good question. So we have clients. We have two main categories of clients. One is they only use us to do their crypto work because their accountant doesn't know how to do it, or if they are filing tax returns themselves by using like TurboTax. But now with crypto, it's more complicated. They don't know how to handle it on their own, so they come to us. So we don't do their tax return preparation. We only do their crypto work. And then another group of clients, we do everything for them from crypto all the way to finish their tax return.
Okay, nice. So if you're out there and you have maybe like a small business or something like that,
Mhm.
that's a great opportunity. You can keep using your normal accountant and then just do your crypto taxes through Sharon and Polygon.
Right. So if you already have an accountant that you have been using, they know your history and they have been great, and you want to continue to use them, by all means, yes. We don't require our clients to switch accountant, and we don't want any of our peers to lose their clients. So we actually encourage people who already have an accountant to stay with their accountant, and we only help them with their crypto side.
Nice, nice. See, sharing the pieces of the pie. Everybody gets a little bit. Great.
Yeah.
Well, do you have any like last thoughts that you want to cover?
Well, I guess it's just be careful when you invest in crypto. It's very complicated, and you want to be careful about your investment. This is one thing. And then on the other hand, is that it's already not easy to go through all the risk and everything in crypto. You don't want to add on to your tax problems by not reporting your crypto transactions or not reporting them correctly.
Exactly. And I'll add on to that. I always try to reiterate that this is your money, and so you should invest in it wisely. Don't get caught up in what other people tell you that you should do with your
Mm-hmm.
investments. This is your money for the rest of your life.
Mm-hmm.
But the investment side is just the first part of it. What
Mm-hmm.
you do afterwards, the taxable side, is how you get to keep it. So
Yep.
if you don't do it properly in the beginning, you're going to lose money on bad investments. And if you don't do it afterwards, you're going to pay too much in taxes, or get screwed by the IRS because you didn't do that part right. So it's not one or the other. You have to take care of both sides of it and do it well.
Yeah, you said it very well. One last thing came to my mind. I think it is important to mention is make sure you put aside money to pay for your taxes. So a lot of people, they keep trading, they keep investing in DeFi and doing really well, have a huge gain, and they're so happy, and they see their portfolio grow, and they say, "Hey, we are going to go to the moon." Great, fantastic. However, when tax time came, there's no they have no saving to pay the tax, and then at that time, then the market crashed, and
Yep.
this happened back in 2018.
Yep.
And so make sure that you have a plan to put aside money to pay for your taxes. And the way that we usually recommend people to do it is, if you don't want to totally get out of crypto, at least to put aside in stable coin. And there are a lot of platforms, they allow you to earn pretty significant percentage of interest on stable coins. So that would be a good way to earn some money while waiting for your tax filing to pay the government.
Exactly. Exactly. Great. Well, how can people reach out to you if they have more questions?
Yeah, sure. So you can send me an email. So it's very easy. Just Sharon at polygonadvisory.com, or visit our website. We do have a contact page there, and our website is polygonadvisory.com.
Sweet. And I'll have all that in the show notes.
Thank you.
Sharon, thank you so much for coming on. This is it. I'm already feeling a little overwhelmed, and I feel like for people who are thinking about coming to you this year, when's kind of like the deadline of no return? Because I know last time you were like, if you don't reach out to me by February, we're not going to be able to get to you because it's so backed up now.
Yes. So we are currently actually taking a pause. We just sent out an email to all our clients and people on our email list. We are going through our annual review. Now the tax season just ended. And we will reopen our doors for the new tax year in about in maybe mid to late November. So I think that is the good time to sign up if you want to start early, because again, the earlier you start, the um, advantage is that you will have time to do year-end planning. Otherwise, if the year is over, it's too late now. However, let's say you don't need to do any planning, you know exactly what you have, then I would recommend that you sign up in early or mid January, and that's about the time that you are going to start receiving your tax documents from like your bank brokerage accounts. So you will have everything ready around early February, and that will guarantee that you can get your taxes done on time. Otherwise, and also of course, depending on how your crypto situation is, because we always need to first finish the crypto reconciliation part before we can finish your tax return.
Yes.
The good news is that we actually have two teams. Like I mentioned earlier, my partner is in charge of the traditional team. So if you use us to do also your tax return, our tax team will be able to get everything all taken care of while waiting for the crypto team to finish the crypto tax report. Once that is done, usually it's a very quick process to just drop it in to the tax return and get it out of the door.
Nice. Nice. Well, thank you for coming on. Enjoy your
You're welcome.
well-deserved vacation for the next month.
Thank you. Yeah, it's a pleasure to be here. I really enjoy talking with you, Michael, and thank you for inviting me.
Of course. And we'll definitely have to have you on next year as well and do a recap of the second year of your
Sure.
business.
Yeah,
All right,
definitely.
everybody. Thank you for
Thank you.
listening. And we'll see you on the next one. Bye-bye.
Thank you. Bye bye.